Okay, so when you hear the words private equity, chances are you're picturing Wall Street, right? Billion-dollar buyouts, massive deals. But what if I told you there's another huge player in the game, one with a totally different playbook? Today, we're hopping across the pond to really dig into the UK's private equity market and figure out what makes it tick.
All right, so here's the game plan. We're going to start by comparing the US and UK markets. Then, we'll get into the nitty-gritty of what makes the UK so different, meet the firms making all the moves, talk about the challenges they're facing right now, and finally, take a look at what's on the horizon.
So, this all leads to the big question, doesn't it? Is the UK's private equity scene just a mini-me version of America's, or is there a completely different game being played? Well, let's find out.
To really get to the bottom of that, we have to understand the story of these two massive financial centers. I mean, sure, London and New York are both global powerhouses, but when it comes to private equity, the rules of the game, and even the personality of the market, are worlds apart. And this is the key thing you've got to get. They're related, for sure, but they are not the same. And the differences go way, way beyond just the size of the market. We're talking about fundamentally different strategies, different industries they focus on, and honestly, a whole different business culture. So let's peel back the layers and see what gives the UK market its own unique flavor. We're going to look at three really important areas: the size of the deals, the sectors they invest in, and what the competition looks like. First up, let's talk about scale. While the US is famous for its mega funds that are out there hunting for those multi-billion-dollar whales, the UK has become an absolute master of a different space, the mid-market. And look, this isn't just a scaled-down version of the US game, it's a totally different sport with its own playbook and its own kind of wins. And to put some real numbers on that, the sweet spot for the UK is typically companies valued somewhere between 100 million and 1 billion pounds. This is the zone where UK firms have a serious home field advantage. They use their deep local expertise to find and grow these awesome businesses that are big enough to make a splash, but still agile enough to be transformed. Okay, next up, where is the money actually going? While US firms often go all in on the big name sectors like tech and healthcare, the UK tends to play a much more diversified game. You'll see them spreading their bets across traditional industries like manufacturing and consumer goods right alongside the booming tech scene. Think of it like building a really balanced, resilient portfolio. And finally, what about the competition? I mean, both markets are absolutely fierce, no doubt about it. But what's really interesting is how the UK is known for being more relationship-driven. Because it's a smaller, more tightly knit business community, deals often get done based on years of trust and deep local insight. It's not just about the spreadsheet, you know? So who are the actual rainmakers here? Who are the firms cutting these checks and making these deals happen? Let's meet the players that really dominate the UK private equity scene. It's a really interesting mix of global giants and local champions. You can pretty much split the big players into two main camps. On one side, you've got the huge American firms. Think Blackstone, KKR, who use London as their base for all their European operations. And then, on the other side, you have these homegrown European powerhouses like CVC and Permira. This clash of titans creates this incredibly dynamic, super competitive environment where global money meets local know-how. Now, with all those major players on the field, it's not all smooth sailing. Not at all. The UK market is currently trying to navigate some pretty serious headwinds, and it's really changing how business gets done. You know, the single biggest driver of all this competition is just the insane amount of money looking for a place to go. Investors have poured huge sums of capital into these funds, what the industry calls dry powder, and all that cash is chasing a pretty limited number of great companies. And, well, you know what happens next? Prices get pushed way up. Of course, buying a company is only half the job. The real trick is selling it later for a profit. That's the exit. And as this quote makes crystal clear, that has become a massive challenge lately. With all the economic uncertainty and a really weak market for IPOs, those traditional exit ramps are looking pretty blocked off. So, what do you do when you can't take a company public? Well, you sell it to another private equity firm. This has led to the huge rise of what's called the secondary buyout. It's basically become an absolutely essential escape hatch in the current market, a way for funds to cash out and return money to their investors. But hey, despite all these challenges, the story of UK private equity isn't one of doom and gloom. Not at all. It's actually a story of incredible resilience and a real knack for adapting. And this really gets to the heart of it.
Even with all the economic pressure and the exit problems, deals are still happening. The market's amazing ability to pivot, to shift from IPOs to secondary buyouts from one sector to another, that's the real secret to its staying power. And that leaves us with this massive question for the future. As all this global money keeps flooding in and the old ways of doing business change, can the UK actually hold on to its unique relationship-first identity? Or will it be forced to adopt the American playbook, becoming just another cog in the global PE machine? That right there is the billion-pound question.